Hello guys, good evening. Yes, new day, new topic. So all of you must be fresh now. Yes, no? Students wanted weekend off. Teacher gave weekend off. So full musti on weekend. So we are geared up for the new topic, I think now. Correct, no? Yeah. Alright. So the topic for today is depreciation. Something which we have done in our plus one and plus two. Maybe a few methods of depreciation. You may have to learn extra here, but more or less something which like we have covered it before. All right. But we will not do the conventional way. We have a different way of covering the syllabus. We will learn everything from our chart books. Okay. So let's learn the things. Okay. First, meaning, sir. This is something which you have done in your plus one, plus two and all. Depreciation. What do we mean by depreciation, sir? What do we mean by depreciation? According to you, what does depreciation mean? No mean, no nothing, sir. Nothing. It means nothing to us, huh? It doesn't mean anything to you. And send your message only to the co-host. Sending a quick hello again there. All right. Anyone has any response to that? Depreciation. Reduction in the value of fixed asset, someone is saying. Asset value decreases over time, somebody is selling. Okay, Monica is saying, sir, it reduce. I don't know what she's saying by reduce. Maybe reduction in value of assets, correct? Yeah, whatever you're saying is right only. Let's take a small example maybe. Sir, I purchased this camera for my online classes. Let's say by paying 50,000 rupees. I purchased it on 1st January 2021. Okay. Right. I started using this camera for my classes. 1 year over. Let's say I am on 1st December 2021. Let's say we're following calendar year as accounting year. So 1st January it began and 31st December, or rather it's not 1st December, 31st December, the year is ending. Okay. Do you think the value of this camera, which I purchased 1 year back, I purchased this camera by paying 50,000 rupees. Do you think now also its value is 50,000 only? If I go and try to sell this camera in the market now, will I get 50,000 only, sir? Obviously no, correct? No. I have used it for 12 months. So due to usage, passage of time, due to technological advancements, due to many factors, the value of the asset reduces. Yes, no? Whatever be the reasons, maybe due to usage, okay, rough usage, or due to the lapse of time, 12 months I've used, or due to technology. Reasons could be anything, okay? Due to that reason, the value of this camera would have got reduced. Yes, okay? Let's say camera has become 40,000 now, assumption. Camera ka value has become, from 50 it has become 40. That means how much has the value got reduced, sir? How much is the value reduction happening here? From 50 it has become 40 means the value is reduced by 10,000. That means can I call this 10,000 as the loss? Can I call this as a loss for 12 months? I used the camera for 12 months or 12 months period has passed. Due to that, there is a loss of 10,000. Can I call it like that? Yes. I've used it for about 12 months. Okay. I've used a particular asset for 12 months. So there is a loss of 12 months. Can I call it like that? Yes, correct. So this loss, ideally where it should go, sir? All losses normally, if it is loss for 12 months, then is it revenue loss or capital loss? Any loss for a period not exceeding 12 months is a revenue loss. Yes, no? That means ideally this 10,000 loss where it should go to? It should go to profit and loss account. Yes or no? Correct? So with these thoughts in mind, they thought, all right, they brought in a concept known as depreciation. They said the value of the asset will reduce due to usage or whatever reason. Hence, some portion of the loss should be booked in P&L every year. Okay. So that means you have to book it in P&L means you need to call it as some expenditure. No, like if you pay something to your employees, you call it salary. Correct. If you're paying electricity charges, you'll call it as electricity charges. That way you'll have to give name to this. No, correct. Due to this loss, that they named it as depreciation. Meaning a fixed asset is getting reduced in its value. Okay. So that reduction in the value of fixed assets, we'll have to book it in profit and loss account. And the name of that expenditure or the name of the loss is given to be depreciation. This is the concept of depreciation. Did everybody understand? Did everyone get this? The logic of it? Yes? Okay now? So why it goes to P&L? Because it is an indirect expenditure, sir. Okay. If it is a direct expenditure, then it will go to trading account. If it is an indirect expenditure, it will come to P&L. Okay. Normally, depreciation is a indirect expenditure. Hence, we see it in P&L account. So what if it is a factory building? Sir, if the factory is necessary for production. Okay. If factory building is getting depreciated, then it will come to trading account. Fair enough. But they won't tell you what sort of building and all in your level. They just say fixed asset. Hence, you always put depreciation in P&L account. If they give you that it is a factory building, then you can very much entitled to put it in trading account. Got it all? Now we discussed what is depreciation, where it goes to. That is one way of putting it. Another way of putting it is, sir, I purchased the camera for 50,000. I purchased the camera for 50,000. Let's say I want to use it for 5 years. I feel I can use this camera for 5 years. Okay. Is this a revenue expenditure or is this a capital expenditure? This camera. Revenue expenditure or is this a capital expenditure? This is a capital expenditure. Yes, no? Correct? Sir, capital expenditure means, see, revenue expenditure means straight away you will transfer it to P&L. Correct? Because you're going to get the benefit only for 1 year. Hence, all the revenue expenditure, you put it in P&L. Okay? Here, it is a capital expenditure. And this asset, I'm going to use it for 5 years means, now you tell me, can I transfer entire 50,000 to my first year P&L? There's an expenditure only. Entire 50,000, can I put it in my first year P&L? No, matching concept, correct? No. Yes. I use this asset for 5 years. That means I'm going to get the benefit from this asset for 5 years. So every year, okay, you have to transfer. This 50,000 you have to distribute over 5 years. So 10,000 you will transfer it to P&L every year. This 10,000 only you call it as depreciation. That is another way to explain this. Matching concept. Okay. Based on matching concept also depreciation was introduced. Okay. Because while using the asset, you're going to get some benefit. Correct. This cost also should be matched along with the expenditure. There goes your concept of depreciation. Okay. Now is the meaning clear for everybody or any doubts anyone has? Depreciation ka funda. It's okay? Fadafad. Yes, sir. Okay. All right. Now we will go for, okay. Somebody is saying, sir, if it is more than 1 year, we show it in balance sheet. Correct. How it gets accounted? Hang on. All right, I'll tell you. Okay. See, you bought the camera only for 50,000. No? Are you transferring entire 50,000 to P&L? No. You're transferring only how much to P&L? 10,000, right? That means how much remains? You bought it for 50. 10,000 you transferred to P&L. How much remains? 40,000. This 40,000 you will show it in balance sheet. Like that. Okay, fair enough. That's how it gets incorporated. We'll get to that portion in a bit. It is there, but it's okay, no problem. All right. Now, all right. So now if you want to know the actual definition of depreciation, if you can remember this, the same definition you will learn in Accounting Standard 10 in your CA Inter. Okay, there it is there. And you learn in CA Final in days 16, Property, Plant and Equipment. Same definition is there. If you can remember, great. All right. You don't really have to, but I've just called out the same thing so that there will be a connection when we study next also. Okay. So depreciation actually means it's a systematic allocation of depreciable amount over the useful life of the asset. Basically, depreciable amount should be allocated over the useful life of the asset. Here, useful life of the asset of this camera was how many years? How many years am I, useful life means how many years am I using this asset? How many years am I expecting to use this camera? 5 years. That means I should charge depreciation on this camera for 5 years. So systematically, I need to allocate depreciation every year over a period of 5 years. That's all is the meaning of depreciation. The depreciable amount you have to allocate over the useful life of the asset. Manageable with the definition. Okay. So everything I understood. What is depreciable amount? Depreciable amount for our class purpose, we'll call it as DA. DA means depreciable amount. Here I've written. Okay. DA simply means original cost minus salvage value or scrap value, or also known as residual value. From the original cost, if you deduct the salvage value, scrap value or residual value, what number you're going to get? No, that only we call it as depreciable amount. To give you an example, okay. Let's say I purchased a plant and machinery for 1 lakh rupees. I paid 1 lakh rupees and I purchased a machinery. Alright, I expect to use this for about 9 years. I expect to use this machinery for 9 years. This is just an expected life, okay? Estimated life this is, okay? That means after 9 years, what will I do? You tell me, sir. After 9 years, what do I do? I want to use this asset for 9 years. After 9 years, what will I do? I will dispose it off, correct? No, correct? Yes. The value that you get at the end of 9th year, we call it as residual value. The value that you're going to get at the end of the 9th year, we call it as residual value, which we refer to as raddi value or scrap value. Because the amount that you get now will be very minimal. Not necessary every time it has to be small value, okay? It could be higher also, alright? But the amount that you get after selling it at the end of 9th year, what we call it as residual value. Residual value, another name is salvage value. It's also known as scrap value. Now, let's assume this to be 10,000 rupees. This will be given to you in the problem. Okay. Now, you tell me, sir, can I calculate depreciation over 1 lakh? Would it be logical? If I transfer 1 lakh to P&L over 9 years, is it logical, you think? No, because at the end of my life, I'm expecting to get 10,000 rupees, correct? At the end of 9th year, I'm expecting to realize 10,000 rupees. That means how much is my loss effectively? 90,000 rupees, correct or no? Correct. So that is what we call it as depreciable amount. From the original cost, if you deduct the salvage value or residual value, okay, that number we call it as depreciable amount. Here, original cost, you bought it for 1 lakh rupees. Residual value is 10,000. That means the depreciable amount is 90,000. Okay, this 90,000 should be allocated to P&L over a period of 9 years. Did you understand this? This 90,000, this depreciable amount, I have to transfer it to P&L over a period of 9 years. That's all as depreciation. That's what we said, we called out here. Repeat or done, not done? All okay? Yes, okay. Next is, sir, why is depreciation necessary? Why should we book depreciation? That is the next concept. We have to book depreciation, one, because the value of the asset keeps reducing. Generally, most of the asset, not every asset, most of the assets value reduces. Why? Due to usage. Okay, the more and more you use the product, it becomes second hand, correct? So, like, due to usage, we may have the value may reduce. That is due to usage, it may reduce. One is that. Second one, due to passage of time. As the time passes, the value also reduces. Okay. And technological changes. Like now do you think you will buy Apple 4 or iPhone 4 will you buy? iPhone 4 will you buy? Would anybody like to buy iPhone 4 or they would like to buy the latest version? They'd like to buy the latest version, correct? No, iPhone 5 or something now has become outdated. Nobody would like to use that. Yes. So technologically, this product has become outdated like that. So due to whatever reason, all right. So the value generally reduces. Hence, accounting depreciation is a must. Okay. Next funda is, sir, land is not depreciated. Can anybody tell me why is land not depreciated? Only on one asset generally. Okay. Generally, land, we don't calculate depreciation. This is a general rule. Okay. Land not getting depreciated. Can anybody tell me? Sir, Gulam Saab is saying, sir, it is an appreciating asset. Hence, we don't depreciate. Okay. Any other reason? Let me first hear your thoughts. Why is land not depreciated? I'm only telling the answer. On land, we don't calculate depreciation. Sir, land cannot be created or destroyed. Okay. Because its value increases over years. Okay. Somebody is saying it's fixed asset. Everything is fixed asset only. Depreciation is calculated on fixed asset only. Okay. All right. It is used for cultivation. Sir, building also depreciated. Okay. They're going off track. Okay. Let me just give you an example. First, let me sort out one misconception of yours. I don't know how you got this misconception. All right. Maybe somewhere in your +1, +2, they told you or something. So I want you to sort out that first. Listen to this carefully. One common answer I got is, sir, land value always appreciates. Okay. Land value does not decrease. Land value always increases. That is the reason we don't calculate depreciation. Majority of you have told that. Okay. Let me first sort that misconception of yours. Recently movie came, blockbuster movie. KGF Part 2 is also releasing. Correct? No. Coal or gold fields, yes. Sir, when you were able to extract the gold from KGF, what do you think would be the land value? Or let's say the land value was 1 crore rupees for 1 acre. If you want to buy 1 acre land in KGF, let's say it costed 1 crore rupees. Assumption, I don't know the exact value. Okay. Now, all the gold has been extracted. There is no gold in KGF now. It's become a barren land, correct? Now, do you think for this 1 acre land, people will still pay 1 crore rupees? Now, do you think, okay, earlier when you were able to mine the gold, the value of this land was very high. People used to pay a lot value and they were ready to purchase that land. Now, it's become a barren land because, correct, all the gold has been extracted now. Now, do you think I'll be able to get 1 crore for this rupees? Now, do you think I'll be able to get 1 crore rupees? No, its value has reduced. Maybe it has become 10 lakh, possible, correct? So, land value always does not increase. That is one misconception. Okay, land value generally increases, but not in every case it will increase. Okay, there are certain circumstances where land value may reduce also. That is based on the real estate economic conditions. Okay, if economic condition is good, if development is happening, land value of that area will increase. If there is no development happening, maybe the land value may reduce also. Okay, that is not the reason why we don't calculate depreciation. See, one of the main reason why we don't calculate depreciation is this. Sir, here I told I will use this camera for 5 years. Hence, what did you tell? Depreciate the camera for 5 years. You told, correct? Because depreciation means what? Depreciable amount has to be allocated over the useful life. Okay? So, if you know the useful life, you can calculate depreciation. Like I told you, plant and machinery, I'm going to use it for 9 years. So, you are telling me, calculate depreciation over 9 years. Land, do you know how many years are you going to use it? Land, does it have a limited useful life or unlimited useful life? Land has a finite useful life or infinite useful life? It has infinite useful life, yes. For how many years you're going to use the land, we don't know. Okay, that is the reason we don't calculate depreciation on the land. That is the main reason. Got it? Not it because it appreciate or depreciate. That is secondary. Life is unknown. That's the reason. Okay. Okay. So now that misconception is sorted. Yes. Okay. Can we go for the next one? What are the factors affecting depreciation? All right. If you want to calculate depreciation, primarily you require 3 things. 3 things is a must to calculate depreciation generally. Okay. General rule. One is the cost of the asset. If you don't know at what value you purchased, you cannot depreciate that asset. So cost of the asset is one major factor. Second one is the salvage value or residual value. You should know that. Third is the useful life of the asset. These are the primary parameters required to calculate depreciation, or depreciation gets affected. How much depreciation you need to account is based on these 3 parameters or these 3 factors. Okay. All this they may ask you for 2 marker as a short notes, or a true or false question can come. Okay. Possible. So hence I've just brought in all this. Alright. Most probably you'll get a numerical question, but just to be on the safer side, we have made everything quite comprehensively. Okay. Alright. Next is depreciation. So when should I start depreciation? Okay. Let me give you a small examples. Excuse me. Sir, I purchased. What is the recent iPhone version? Anybody has? I've not kept track. What is the recent iPhone version? iPhone 12, 13, what is it? 12. Okay. Let's say I purchased iPhone 11 by paying 1 lakh rupees. Assumption. Okay. I purchased iPhone 11 by paying 1 lakh rupees. Assumption. Okay. Let's say I purchased it on 1st April 2021. Okay. Fair enough. Excuse me. Let us say I was busy. Okay. Or 1 minute. Let me just... Okay, no problem. Let me continue it. Okay. Let's say I started using this iPhone. I started using this iPhone from 1st June 2021. from 1st June 2021. I was busy. Maybe I was preparing for my CA exams or whatever. I bought the phone. Okay, I know a little not unrealistic of you. The moment you buy, there only you'll tear off it and you'll start using it. Okay, all right. That's the reason I thought I'll modify the example. Then I thought, okay, no problem. Let's see that we have that high willpower. Okay, we purchased on April till June. Okay, we do not open it. My question to you is here: will you start charging depreciation on this phone from 1st April 2021 or 1st June 2021? This is the day it is available for use. If I want, I could have started using this phone from 1st April 2021 only. Okay, but this is the date on which I actually started using it. Actual date of usage. If I want, I could have started using it from 1st April, but I started using it from 1st June. Okay, let me just make example little interesting. I'll make this as 1st March instead of 1st April. Okay, I borrowed on 1st March. I started using on 1st June. Now you tell me, which date should I start calculating depreciation from? Should I calculate from 1st March date or 1st June date? Okay, Vishal is saying 1st June, Paras is saying June, Pranav 1st March. Okay, March is the famous. Okay, ideal answer is, or the correct answer is 1st March. From the date the asset is available for use, that is the date on which you should start depreciating the asset. Not actual date of usage is irrelevant for charging depreciation. Depreciation which should start from the day it is available for use. So why like that, sir? Simple, sir. Okay, you bought it on 1st March. You did not even open it. Brand new box piece. Okay, even that wrapper also you have not opened. Kept it like that only. Right? On 1st June, there is a change of mind from your end. You thought iPhone 11 beta. Okay. Alright. iPhone 11 I don't want. I will buy iPhone 12, you thought. Okay. You bought it. You do not use it. Okay. On 1st June, there is a change of mind. Okay. Whatever reason. You thought you will buy iPhone 12. Okay. Now, you took this brand new phone. No? Let's say you went to Chroma or Reliance Digital and you purchased this phone. You took this brand box piece to them, that Chroma Digital. You showed the invoice. You told them that you have not even opened this box. The value of this phone, you paid 1 lakh rupees for this phone. Okay. And you are telling the Reliance Digital people, give me my 1 lakh rupees back. Will they give you? You did not open it. You did not even use it. Okay. Brand new box piece. Okay. It's like that only. Full fresh chaka-chak it is. Okay. Fair enough. Just after 2 or 3 months, you are going to them and returning the same box piece with that mint condition back. Will they give you 1 lakh rupees? Absolutely no. Yes or no? They may say 60,000 or 70,000 rupees I'll give you. Want means take, otherwise get lost. Yes or no? Correct? That means you logically tell. You did not use it, but still did the value of that asset go down? You did not use it, but still did the asset go down value? Yes, that is the reason actual usage date we don't worry about when we are calculating depreciation. Okay, we don't calculate depreciation from the usage date, but we check from when was the asset available for use. Hence, that is the logic of charging depreciation from the available for use date. Manageable now? That's what I've written here. Depreciation should start from the date asset is available for use. Manageable, I think now. Yes. Okay, I'm giving you a little detailed explanation because the same thing you'll learn in your CA inter also. Okay, that's the reason I'm just giving you a little extra shots so that it'll remember. Okay, next is objectives of depreciation. What do we try to achieve by charging depreciation? By charging depreciation, what will happen? One, you will get the correct income. See, depreciation is a loss. We already proved that. What is that? Depreciation is an expense. All expense should go to P&L. Yes. If you don't charge depreciation, then will you get the correct income, sir? If you don't account depreciation, will you get the correct income? No. So to get the correct profit and loss account, to get the correct income, so charging depreciation becomes a mandate. That is one of the objectives. Okay. Second, sir, asset also will be shown in balance sheet. Yes. Here in this case, I told 40,000 will be shown in the balance sheet. Correct? No? You bought the asset for 50,000. But at the end of the year, asset ka value is only 40. Hence, you will show 40 in balance sheet. Yes. So if you don't deduct depreciation or if you don't charge depreciation, asset will be shown at incorrect value in balance sheet. So your financial position or your balance sheet will be wrong. Hence, depreciation charging becomes an important. That is the second aspect. Third aspect, fund for replacement. See, every year by charging depreciation, mentally that becomes a checkpoint for you. What checkpoint? My asset ka value is going on reducing. That means what will run in back of my head? I have to keep some fund to replace the asset, correct? This asset will not come forever. After 5 years, I need to buy another asset. That means I need to know how much money I need to set aside every year so that I can purchase a new asset, correct? So depreciation acts as a checkpoint, or it acts as a funds for replacement purpose. You will exactly know how much you should set aside so that you can buy a new asset going forward once this asset has become redundant. That is another objective of depreciation. Any doubts anyone is having till now? No, sir. Okay, awesome. All good, no? All rosy only, no? Okay. All right. Next this is important for you. Methods of calculating depreciation. Till now what we discussed more or less for the true or false. All right. Okay. Now we will get to the numerical. This is where your number driven things will start. Methods of calculating depreciation. There are various methods suggested to calculate depreciation. We look at one by one. We will learn it. Then we will apply it in one problem and come back. Like this we'll keep learning. Okay. First is straight line method, or we can call it for our class purposes SLM method. First method of charging depreciation is straight line method or SLM method. Under this method, depreciation is given by the formula. Same thing. Original cost minus salvage value divided by useful life of the asset. That's what we did for camera, correct? Original cost minus salvage value divided by useful life of the asset. If you do that, you're going to get depreciation every year. You're going to get depreciation per annum. Meaning every year, how much is the depreciation you're going to get. Okay. One of the thing of straight line method is the depreciation that you account is the same every year. Hence the method name is straight line method. Depreciation will be like a straight line, meaning it will be same every year. Hence the name straight line method. Okay. Can we apply this in one of the problems? So that we know how it is. Okay, let's come to question number 1 immediately and solve off straight line method. Jain brothers. Is this the best method? No, sir. There is no best method actually. There is nothing like a best method. Okay. Standard tells you AS10 and Ind AS 16 says you should choose a depreciation method. Company should choose depreciation method based on the pattern of economic benefits that you're going to get. Okay, a little too much for your level. Leave it off. That we will discuss in the next stage. Okay. There is nothing like a best method. There is a certain way to select it. For you, it will be a little out of syllabus. Let's not go there. Okay. Fine. Okay. Jain brothers acquired a machinery on 1st July 2018. Let's underline that. At a cost of 14 lakh rupees. So they paid 14 lakh rupees and they purchased that asset. And they spent 1 lakh on its installation. Now you would tell me this 1 lakh rupees installation charges. Is it revenue expenditure or capital expenditure? Revenue expenditure or capital expenditure? This is a capital expenditure. Agreed? Yes, capital expenditure. So that means what we should do for this? This 1 lakh, will it go to P&L? No. This 1 lakh will be added to the cost of the machinery. Yes, add to machinery cost. That's what we mean by capital expenditure. Yes, you add it to the cost of the capital asset. Yes, it goes to balance sheet. Perfect. Okay. That means, can you tell me what is the cost of this machinery? 14 lakh you paid to buy the asset. 1 lakh was paid to install the asset. That means how much money you spent to bring the asset to the usable condition? 15 lakh rupees. So 15 lakh rupees is the original cost of the asset. That's the first portion. Manageable. So OC as an original cost is 14 lakh plus 1 lakh, which is 15 lakh rupees. Okay. The firm writes off depreciation at 10% per annum of the original cost every year. So what is original cost? 15 lakh. And how much is depreciation they're telling? Depreciation is a 10% on the original cost. That means, can you tell me what is the depreciation per annum? Meaning every year, how much will be depreciation? 15 lakh is the original cost. Of that, they're saying 10% is depreciation. So 15 lakh ka 10% is how much, sir? 1.5 lakh. Yes or no? Now you tell me, okay, will the depreciation changing, sir, or it is same every year? Is the depreciation same every year or it is fluctuating? Original cost is same, no? 15 lakh. That means every year depreciation is same, correct? Hence, which method are we solving here? We are applying SLM method or straight line method. Got it? That's another way. Sometimes they will tell you SLM method. Sometimes you need to infer. Here they told 10% on the original cost. Original cost is fixed. That will not change, no? That means the depreciation also becomes fixed. So it is a straight line method of depreciation. Okay, the books are closed 31st December every year. So you are following calendar year. 1st January you open the books, 31st December of the year you close the books. Show machinery account and depreciation account for 2018 and 2019. For 2 years you need to prepare machinery ka ledger, depreciation account ka ledger. That's all they are trying to ask. Okay. Alright, so maybe this first question we will do it off. Okay. First, working note number 1. Depreciation. Depreciation. I'll write here particulars. You can present it in any format. Okay. Alright, year 1, year 2. Or maybe I'll write full way. Year 1, that is 2018, no? And 2019. So year 1 is 2018. Year 2 is 2019. Alright. Okay. Can you help me calculate the depreciation here, sir? Can you help me with the depreciation? What is the original cost? Original cost is, or maybe we'll write off the original cost here for your reference. What will be the original cost? Original cost is 14 lakh plus installation charges of 1 lakh, which will be 15 lakh. Okay, for both the years, original cost is same only, no? That will not change. That means, can you help me with the depreciation? What do you think will be the depreciation for the first year? They told in the problem, depreciation is a 10%. Okay, 10% per annum. So 10% of original cost. Original cost is 15 lakh. Can I write directly into 10%? Can I write into 10% or should I do 10% into 6 divided by 12? Should I write directly 10% or should I do 10% into 6 divided by 12? I should do into 6 divided by 12. Why? So that's the reason I underline the date also for you. Check. Sir, I bought the asset from which date? 1st July 2018. My year may start on 1st January. See, 2018 means what, sir? What will be my accounting year? It will begin on 1st January and it will end on 31st December 2018. 2019 accounting year will start from 1st January 2019 to 31st December 2019. Okay, this is my year. Alright. But did I buy this asset on 1st January only? No, I bought this asset only from 1st July. Correct. So 1st July I bought it and my year is ending on 31st December. That means in 2018, how many months did I use that asset, sir? I started using the asset only from, or it's available for use only from July. That means July, August, September, October, November, December. Okay. This is 10% per annum. PA means per annum. It's for the whole year. For the first year, did I use the asset for the whole year or only for 6 months? In the first year, I used the asset only for 6 months. Hence, you'll have to prorate or you have to write 6 by 12. Got it? Hence, this will be 75,000 for the first year. Any calculation problem? Anybody? Nothing. Yes? Okay. Alright. Second year, what will be the depreciation? Original cost is still 15 lakh. Into 10%. Now, should I again write 6 by 12? Second year, should I write again 6 by 12? No. Why? Sir, I already bought the asset. That means for full 2019, I can utilize the asset. No. This asset is available for use for the whole 12 months of the next year. Yes. That means I don't have to do anything. Or if you want, you can write into 12 by 12. Or you can cut off this also. Because 12 by 12 is 1. No. If you want, you can write it or you can leave it off. Manageable. So this becomes 1,50,000 for the year 2. This is my working note number 1. Then if you want, you can show it. First problem, hence I am showing it to you. In fact, in study material and all, they've showed it here only. Okay. Here also, you can directly show it. That's not a problem. First problem, I wanted it to be a little detailed because some of them are learning this concept for the first time. That's the reason. Okay. All right. Next is what now is the requirement. What is the requirement they're asking, sir? They asked you to prepare machinery account. Machinery ledger they asked you to prepare, and they also asked you to prepare a depreciation ledger. 2 accounts they're asking you to prepare. That's all. So we will make that. So ledger means it'll have date, particulars, amount. Journal folio column I'm not writing. Okay, so it is fine. Date, particulars, amount. So these many columns we will have. This is your depreciation ledger. Similarly, I'll have the same columns for the machinery account also. Date, particulars, amount. This is your debit side. Replicate the same on the other side. Date, particulars, amount on the credit side. For 2 years, you need to prepare the ledger, sir. Can we start off? Yes, machinery is an asset. Assets are real accounts. Depreciation is an expense. So expense is a nominal account. Yes, correct. Okay. Alright. When they ask you to prepare ledger, don't waste your time by preparing journal entry. Okay. With journal only you can prepare ledger. You should be able to visualize the journal and post it into the ledger. Like, what is my first activity happened here? On 1st July, I purchased an asset. What is the journal entry for asset purchase, sir? Machinery is an asset. Asset is coming in. So you need to debit. Cash or bank will go out. So what is the journal entry for machinery purchased? Machinery account debit to bank account. Yes. So I will write here to bank account. Alright. Now don't expect a journal entry and all for this. Okay. Now we have come to this topic. So you must be comfortable with this. Yes. So you purchased this asset on which date? 1st July 2018. You purchased it for how much? 14 lakh rupees. That's all. No, 1 lakh rupees you spent on installation. No. Even installation is a capital expenditure. So same journal entry. Machinery account debit to bank. Instead of passing 2 journal entries, I'm just collating and clubbing directly, putting it as 15 lakh here. If you want, you can show 14 lakh one separate entry, 1 lakh a separate entry, or directly you can show like this. It is okay. Manageable. Fine. To bank account. Yes. What about bank account? Bank ledger they have not asked. No? So why do we prepare that? Whatever they've asked, you prepare. They only asked a 2 ledger. No? Machinery and bank. So only do that. Yes. Directly you can write 15. That's what I've written. In fact, in study material, they've shown 14 lakh separately, 1 lakh separately. Now they have shown later on first problem. No? They will also combine. So this is acceptable presentation. Don't worry about that. Manageable. Okay. First is this. In this 2018, any other transaction happened? One more machinery did I buy? Only one asset I bought or one more I bought? No, only one asset. Now, I've used this asset in the first year for 6 months. Yes, I've used this asset in the first year for 6 months. That means, do you think this machinery ka value will be 15 lakh only or it would have reduced? Due to usage, its value would have, due to usage, technology or whatever, its value would have reduced. Yes, correct. That reduction in value only we call it as what? Depreciation. Hence, what is the journal entry for depreciation, sir? Can you tell me the journal entry now? Depreciation is an expense. So, expense should be debited. Correct? Because all expense you will debit. What will you credit? Due to depreciation, what is happening to your asset? Asset value is reducing. That means you will credit fixed asset account. Here, what is the name of the fixed asset? Machinery. So here the journal entry will be depreciation account debit to machinery account for first year 75,000. That is your journal entry. Got it? It's for the year 1, 75. Just I'm telling you for your reference, the journal entry, not required. Okay? Only your reference. Okay, so now this journal entry, we need to post it into the ledger. In your fixed asset is nothing but machinery here. In machinery ledger, what will be the posting, sir? What will you write? On 31st December 2018, because you calculate depreciation at the end of the year. So you will write by depreciation account. You can give the references working note number 1. This is my working note number 1. No? Here I have clearly calculated how much is first year depreciation. That will be 75,000. This is my journal entry. Okay? Everyone fine, no? Just the posting, that's it. Anything else happened in the first year? Nothing. That means at the end of the year, this asset ka ledger I need to close. No, every year, every ledger I need to close. This side total is 15 lakh. That side also should be 15 lakh. But is there any balancing figure? Yes, I think the balancing figure is 14 lakh 25,000. What is that? You'll write that as by balance carried down arrived as balancing figure 14,25,000. That's all. Easy? Yes. In depreciation ledger, what will you write, sir? Same journal entry. What is the journal entry for depreciation? Depreciation account debit to machinery account. That means in your depreciation ledger on 31st December 2018, what will you write? To, I've called it as machinery. Yeah. So to machinery account. In your depreciation ledger for the first year, you'll write to machinery 75,000. Okay. That's all, no? That means this side total 75,000. That side also should be 75,000 only. So depreciation, write balance carried down. So will you write for nominal accounts by balance carried down, or where will all the nominal accounts get transferred to? All the nominal account will get transferred where, sir? To profit and loss account, correct? No. If it is a direct expenditure, it will be transferred to trading account. If it is indirect expenditure, it will be transferred to P&L account. Okay, have they told you this machinery is a factory machinery? Anything like that? Have they mentioned here? Have they told? No. In that case, you always transfer depreciation to P&L only. Fair enough. If it is a direct expenditure, they will clearly mention. Alright. If they are not mentioned, directly transfer it to P&L. So what is the transfer entry? Can you tell me? If you transfer depreciation to P&L, that ledger balance should become 0. Correct? No. Because when you transfer nominal accounts to P&L, that nominal account ledger balance will become 0. So what is the transfer entry? You have debited depreciation. To transfer, you will credit. Where you will transfer that to? P&L. That means you will write the journal entry as profit and loss account debit to depreciation account 75,000. This is the journal entry for depreciation. That's it. Actually, there are a couple of methods of accounting depreciation. This is one method. Another method I'll tell you later. Okay, fair enough. So in your depreciation ledger, what will be the posting, sir? At the end of the year, 31st December 2018, you will write by profit and loss account, P&L account. If you write P&L, that is acceptable because P&L is an acceptable short form. So that will be 75,000. This way, this ledger got matched out. Okay, sir? Yes? That's all? No. For 2019 also, they asked you to prepare the ledger. That means what do we do now? Again, open the ledger. Okay. So by balance carried down becomes what, sir? For the next year, that is 1st January 2019, you will write to balance brought down. Bring it down because all assets will have debit balance. This you will carry forward to the opposite side, which will be 14,25,000. We have done all this in ledger now. Okay. Even science students should be comfortable with this. Yes, no? Provided you are practicing it. Yeah. So to balance brought down is 14,25,000. Great. You're saying I'm practicing. That's nice to know. All right. 2019, what happened, sir? Again, I use this asset for 12 months. That means again I have to calculate depreciation. For 2019, what is my depreciation? 1,50,000. So what is the journal entry for depreciation? Depreciation account debit to machinery account and then profit and loss account debit to depreciation. These two entries I need to pass. Same entry, but instead of 75,000, in year 2, I will pass it for 1,50,000 because second year ka depreciation is 150. That's why. Okay. Can we do that posting? So on 31st December 2019, we will write by depreciation account. As per working note number 2, the amount is 1,50,000. Anything else happened in 2019? Did I buy any asset? Did I sell any asset? Nothing. That's all. That means at the end of the year, I can close the balance. By balance carried down, arrived as balancing figure. How much is that? 14,25,000 minus 1,50,000 will give you 12,75,000 is ledger ka balance. So this ledger is closed off. Both the sides 14,25,000. So machinery ledger we have done for. Same fashion we need to close depreciation ledger also. So entry when depreciation will be on 31st December 2019. Journal entry for depreciation is depreciation account debit to machinery account. So in depreciation ledger on debit side you'll write to machinery 1,50,000. Depreciation is an expense. All indirect expense will be transferred off to P&L. That means on 31st December 2019 you will write by profit and loss account 1,50,000. So this ledger is also closed for second year. That's all they asked. Okay. This is a appetizer, starting problem. Don't expect these sort of problems to come up in your examination. Highly unlikely. Okay, this is just to get you started with the topic. That's all. Okay, so simple they will not ask. Okay, some extra adjustment they will ask you. Slowly we'll get to that. All of you comfortable with this, no? Working note is necessary in exam? Not necessary. Okay, you can show the working note here only. Alright? Simple working note means show it inside only, no problem. Like the way they've done in study material. You can show it here only. Okay? But first problem, hence I showed you. That's it. Okay. Alright. Can I get to the next one then? This is okay with you, no? Can I get to the next? Okay. Nothing now. Straight line method you're comfortable with now? Straight line method you're comfortable with? Yes. So depreciation remains constant every year. Sir, but we didn't use the formula. Don't worry. We will use it next. Why we didn't use the formula? Sir, because they gave the rate of depreciation. If the rate of depreciation was not given, we would have used this formula and calculated the depreciation. Here they directly gave the rate of depreciation. Hence we applied that. That's all. Okay? Fair enough. So can we get to the next method then? Yes, that is diminishing balance method, also known as WDV method, or also known as written down value method. Few names. Diminishing balance method, written down value, that is WDV method, or reducing balance method. They say. Okay. So name itself is saying diminishing balance method. That means depreciation in the initial years now will be more. As the time passes, depreciation will go on reducing. Depreciation will go on reducing as the year passes. Hence, the method name is diminishing balance method or reducing balance method. Depreciation every year goes on reducing it. Okay, fair enough. Now let's see how this depreciation gets reduced every year. Let's learn this with the help of our problem. Second question. We will apply this in second question. Jain Brothers acquired a machinery on 1st July 2018. Same question it is, in fact. Same as a question 1. For 14 lakh rupees. They spent 1 lakh rupees on installation. That means what is the original cost of this asset, sir? OC. OC means not Kannada or Tamil OC. OC means here original cost. Okay. So what is the original cost here? 14 lakhs plus 1 lakh, which is 15 lakh rupees. Alright. The firm writes off depreciation at 10% every year. Same depreciation the firm is charging. Alright. But check the difference. Did they say it is 10% on original cost every year? In the first problem, they clearly told 10% of original cost. Have they mentioned here 10% of original cost? No. They just said 10% every year. Okay. The books are closed 31st December every year, they have said. You need to show machinery account on diminishing balance method. That means depreciation here is calculated on diminishing balance method or written down value method or reducing balance method. Okay. For the year 2018 and 19. Same funda. Okay. Same funda. Alright. But the amount of depreciation will change every year. So ledger I will not do again. I will just show you the calculation of depreciation. Would that work out for you? This is okay. We'll run through it now. In the problem, in the examination, clearly they will mention which method. That you don't have to worry. If they don't mention, you choose whatever method you want. Write it and note. I have assumed straight line method. I have assumed written down value method. Like this, write a note. It is fine. But don't worry. So far I have not seen such questions. They will mention which method. Okay. So let's learn this in, where is that? Okay, 1 minute. Okay. I'll put up the solution here only maybe. Question number, or it's okay. Question number 2 ka working note number 1 we will do here. That is depreciation. Just the depreciation portion I will do it for your reference. Working note absolutely, okay, I think it will be good if you can make it. Particulars, 2018 I will write. That is year 1. Then it is 2019. For 2 years I am showing you the depreciation working note. Ledger will directly do it. First, now how depreciation works, or you can give the heading as depreciation under WDV method. WDV means written down value. Written down value method. So how does this work? First, we'll calculate original cost. What is the original cost, sir? What is the original cost? Original cost is 14 lakh you purchased it for. 1 lakh was installation charges. That means original cost is 15 lakh. Agreed? Or I'll write it as, instead of original cost, I'll write it as book value. That will be better. 1 minute, hang on. I'll present it like this. This will be easy for you. WDV or book value at the beginning of the year. At the beginning of the year. Okay, when you purchased, what is the book value of the assets? 15 lakh rupees. You purchased for 15 lakh rupees. Book value and original cost same. No, it is not same. Hang on. It is not same. That's the reason I just modified that. Okay, fine. You're copying this or you're just watching it? You're just copying it or watching it? Or maybe just for the science benefit students. No, I will just modify this in a little bit different way. Okay, I will just modify it. Just maybe for he may understand this a little better. So just for his benefit, I'm just modifying this. Okay, no problem. Copy this way then. Book value, I will write it like this. It'll be easier, I think. Book value. When did you buy the asset, sir? You purchased the asset on 1st July 2018. Okay. You purchased it for what value? 15 lakh rupees. 15 lakh rupees. Agreed? Okay. So how depreciation is calculated under this method? For first year, same. Take 15 lakh rupees. 15 lakh rupees. What is the rate of depreciation they told in the problem? The rate of depreciation is at 10% every year. So calculate 10% of this. But did you use this 10% is per annum, meaning it's for the whole year. It's for the whole year. Did you use the asset for the whole year in 2018? No. Okay, you've started, or it's available for use only from July. So July, August, September, October, November, December. Only for 6 months it is available. So into 6 by 12 you do. That means you're going to get 75,000 only. So that is same as straight line method? Yes. Written down value method and straight line method. In the first year, they give you same depreciation generally. Okay. Generally. Alright. So this is 75,000. From the book, from this, if you reduce depreciation, you're going to get the book value at the end of the year. Can you tell me what is the book value at the end of the year, sir? Or what is the value of the books at the end of the year? First year is ending on 31st December 2018. What is the book value? It will be 14,25,000. Correct? This is for the first year. No problem, everybody. I purchased it for 15 lakh rupees. First year, I have charged 75,000 as depreciation. So due to depreciation, value has reduced. So value at the end of the year has become 14,25,000. Okay, even science student is okay, no? Yes, I'm just modifying this only for your purpose. Done, right? Okay, this is depreciation for 2018, sir. Now, you have to show the ledger only for 1 year or 2 years? For 2 years, right? So, depreciation for 2019, how we're going to calculate is, under written down value method, you will not calculate depreciation on the original cost. Okay? For 2019, what is the written down value, sir? First year ka closing balance will become second year ka opening balance. Yes. So what is the value of the asset on 1st January 2019? This only you will carry it to the next year. No? 2018 you will close the balance. So this will be the closing balance. You will carry forward this to the next year. Yes. So what is the value of the asset now? 14,25,000. On this you need to apply 10%. So you will not calculate on 15 lakh. At the end of the year, okay, how much ever is the balance, on that you will go on calculating depreciation each year. Fine. That means how much will be depreciation, sir? Depreciation will be 1,42,500. Did you get now, everyone, how? Okay, right? Yes, that's all it is. The value keeps reducing. On this reduced value, you calculate depreciation. That's it. That means what will be your book value? At the book value, we can call it as BV. Book value on 31st December 2019 will be how much, sir? Book value on 31st December, second year end, how much it will be? 14,25,000 minus 1,42,500, which will be 12,82,500 rupees. That is your depreciation. Okay, Nasaru. The calculation part. Is everyone right? Should we reduce it till it is 0? Not necessary. Under return on value method, there will be some residual value which you will write off. Company will have a policy. Once it reaches maybe 5,000 rupees, 1,000 rupees, they will write it off. Okay. It will never become 0 under WDV method. Some residue will always be there. Original cost is, see, book value simply means, somebody is asking, sir, what is the difference between book value and original cost? Sir, I purchased the asset for 15 lakh rupees on 1st July 2018. Okay. This we call it as original cost because originally I purchased this for asset, correct? Whatever price I have paid to purchase this asset initially, that we call it as original cost. Is that line clear? Originally, whatever price you pay to buy the asset, we call it as original cost. Fine. Okay. Book value means what is the value you will show in your books. Can you tell me what is the book value on 1st July 2018? On 1st July 2018, how much is the value of that fixed asset you will show in books? You will show it at 15 lakh only, correct? No? You bought the asset for 15 lakh, you will show it at 15 lakh. Okay. Does it mean you will show in your books 15 lakh throughout? Even after 5 years also, do you think it will be 15 lakh only? No. Due to depreciation, book value will go on reducing. Book value simply means what is the value of that asset you are showing in your ledger. Ledger ka balance. Okay. That means, can you tell me what is the book value on 31st December 2018, sir? You bought it for 15 lakh rupees. First year you deducted depreciation of 75,000. That means what is the book value? 14 lakh 25,000. Book value simply means what is the value you are showing in books. So book value and original cost will not be same. On the day you buy the asset, book value, original cost will be same. There afterwards, book value will go on reducing because you charge depreciation. Now is it clear? Residual value, scrap value, same sir. Correct, okay, sir. It's the same only. Correct. Okay. Now I think it's comfortable. So you know the depreciation now. Now I think can we run through it as solution method? Would that be okay? They only asked you machinery ka ledger. This is your machinery account. Okay. Machinery account. What is the journal entry you will pass? 2 years you need to prepare. Can we run through that? Comfortable, no? So what will be? When you purchase the asset, the journal entry will be machinery account debit to bank. You paid 14 lakh on 1st July and you purchased the asset. And you paid 1 lakh rupees for installation charges also. Same journal entry. Machinery account debit to bank, 1 lakh rupees. I told you can show it separately or you can combine, your choice. This is your 15 lakh. Okay? Yes. In 2018, any drama happened? No other drama. You did not buy any asset, nor did you sell any asset. But you used the asset, no? That means you need to calculate depreciation. What is the journal entry for depreciation? Depreciation account debit to machinery account. Yes. That means in your machinery ledger, what will be the posting? On 31st December 2018, you'll write by depreciation. As per our working note number 1, we prepared it. We got your asset value to be how much, sir? 1 minute, let me push this a little closer. As per working note number 1, what is first year depreciation? 75,000. Okay. See here, they have not even prepared working note. They showed the working here only. 15 lakh into 10% into 6 by 12. They showed like this and do it also. First problem, hence I showed it separately. In your examination, you can show it. If it is simple enough, you can show it there only. Manageable. That is the journal entry for depreciation. Okay. No other drama. That means on 31st December, you'll have the closing balance of the asset, which is 14 lakh 25,000. So 2018 ka ledger is closed. They asked for 2019 also. That means 2018 ka closing balance will become 2019 ka opening balance. So this balance carried down will next year will become 2 balance brought down 14 lakh 25,000. Actually depreciation ka working note not ever necessary. Now will you calculate depreciation on 15 lakh for the second year? Will you calculate depreciation on 15 lakh for second year? No. You will calculate it on the book value. What is the book value on 1st January 2019, sir? What is the book value on 1st January 2019? It is 14 lakh 25,000. Calculate 14 lakh 25,000 ka 10%. You're going to get 140 to 500. That's all. Okay. So that will be your depreciation for the second year. Alright. Next is after charging depreciation. No other drama happened. So by balance carried down, you're going to write and close it off. Okay. That's all for the, if that ask depreciation also, same thing you will do. We prepared for the last problem, remember? Yes. Even depreciation ledger will be the same. Only amount will change. Second year, instead of 1,50,000, it will be 1,40,000 to 500. That's all it is. Isn't it simple enough? Correct? Whatever is your opening balance for the second year, no? On that, go on charging depreciation. That is your WDV method. Even science student is okay now? Yes, he's also saying all good, sir. That's nice to hear. Okay, so that means first method straight line, second method WDV. That is done, not done. Can we get to the third method? Third method, which is sum of years digits method. I don't think so you have done this in your 11th and 12th. Have you? Sum of years digit method. Have you done this? No, not done. Okay, that means something to look forward to now. Okay, I think you did only straight line WDV. Yeah, no problem. Let's see how this works. First, how do you calculate depreciation under this method? Depreciation is given by DA. DA means depreciable amount. Depreciable amount multiplied by the remaining life in years divided by total life in years. How do you get total life? There are a couple of ways to calculate it. One simple way is total life is given by the formula n into n plus 1 divided by 12. If you do n into n plus 1 divided by 2, you're going to get total life. I'll tell you a simple one also. Okay. If you want the easiest way, this is the one. Alright, let's see. I know that nothing much you understood. Alright, no problem. Let's apply. When we apply only, we will get to know, our understanding gets better, right? Let's solve question number 3. That is sum of years digit method. There we will learn how depreciation is calculated under sum of years digit method. Messrs. Akash purchased the machinery for 10 lakh rupees. I mean, can I call this as an original cost? He purchased it for 10 lakh rupees. Estimated useful life and the scrap value were 10 years and 1,20,000 respectively. So this Messrs. Akash, this particular entity, they are thinking they will use this asset for 10 years. At the end of 10th year, when they sell this asset, they will get 1,20,000 is what they are estimating. Okay, that is what we mean by residual value or scrap value or salvage value. Multiple names, meaning is the same. Okay, all right. The machinery was put to use on 1st January 2014. When they have purchased, have they given? When they have purchased this machinery, have they told? No. Yes, that is missing. They've used this asset or they started using this asset from 1st January. Actually, the usage date is irrelevant. We want to know from which date was it available for use. Have they told this asset was available for use from so and so date? Not given. That means what? The day you purchased it only, you started using it. Is the assumption you need to go ahead with this. Meaning you need to think you purchased the asset on 1st January only. It was available for use on 1st January only. It was put to use also on the 1st January only. That is the only way. So I want to assume my dates. Please don't do all that. Okay. You lose marks. Okay. If they give it, calculate. Otherwise, don't bring in your own theory. Okay. My birthday I will take, sir. Bada sir. Don't take all that. Chariya. Okay. Show machinery account, depreciation account for 2019 by using sum of years digit method. You don't have to write any note for all this. No, this and all note not required. If note is required, I'll tell you. Okay. So same funda. So machinery depreciation ledger for, in fact, they asked you to prepare machinery depreciation ledger only for 2019. Okay. That means, can you tell me, are they following April to March wala year or are they following Jan to December wala year, sir? Accounting year generally is what, 1st April to 31st March of next year or 1st January to 31st December. What do you think here it is? Sir, they have given the data as 1st January and they told only 2019. See, if it has to be 1st April to March wala year, no? So if the year begins on 1st April 2018, yes, or 1st April 2019, it will end on 31st March 2020, correct? No? Correct. That means the 2 years will be followed, 2019 to 2020. Yes, but here they only told 1 year. Only 1 year will be covered only under which possibility? Calendar year wala possibility. Yes, no? Because calendar year will start on 1st January 2019 and it will end on 31st December 2019. Okay? So if they don't give it and if they tell you just 2019, then take it as calendar year. Okay? Like that. That way you can decode that. Manageable. What I said went in no. Goinda ila went in now. Okay, awesome. So sum of years digit method. First, let's do a thing. We will put up a working note to calculate depreciation. Ledger, I think now you got it now. Ledger mein there is no funda at all. It's a very, very easy thing. Yes. So calculation of depreciation is a funda here. So question number 3 ka, we'll put up a working note. They have done anyway working note also here. You can just check. That is good only. All right. Same thing, I'm just going to present it. Okay, working note number 1, depreciation. But I will not show depreciation only for 1 year. I will show it for 3-4 years because there is only one problem in your study material where they've asked sum of years digit method. So if I show it only for 1 year, it will be like practicing only for 1 year. If I show it for 3-4 years, no, you'll get a little extra practice. So I'm going to show it for a few more years. Okay. All right. So that way my working note will be long. In examination, you can present only this. That also I'll tell you. So how to calculate depreciation under sum of year. All of you just watch out here. Sum of years digit method. First, depreciation is given by the formula, or you can just write first the total life. Sir, check out here. How many years are they planning to use that asset, sir? How many years is this company planning to use the asset? 10 years. Yes. The method name is what? Sum of years digit method. That means they are asking you to sum up all the years. Take from 9. 10 plus 9 plus 8 plus 7, 6 plus 5 plus 4 plus 3 plus 2 plus 1 you do. How much you going to get it? 19. So it is 27, 34, 40, 45, 49, 52, 54, 55. Huh? Are you getting 55? If you sum up all this, are you getting 55? Yes. Okay. This is one approach using which you can find out the total life. Just summing up all the digits. That is the first step. Did everyone understand? Okay. Just to be sure, let me modify it. Suppose the life was only 5 years. What you would have done? Suppose the life was only 5 years. What you would have done? Start adding from 5. So it will be 5 plus 4 plus 3 plus 2 plus 1. It will be 9, 12, 14, 15 in that case. Like this. Okay now? Based on the life, your calculation works. If the life is only 3 years, then it will be 3 plus 2 plus 1, which will be 6. Like this, the calculation will move forward. Everyone understood this total life wala calculation? Yes. Either you can do like this, or you can simply apply the formula n into n plus 1 divided by 2. This is the shortcut way. N is what here? When you bought it, for how many years are you planning to use this asset? You're planning to use the asset for 10 years, no? So n is 10. N plus 1 will be 10 plus 1 divided by 2. If you do this, you're going to get this in 2 seconds. So either you can use the formula. If you feel no formula, I will forget it. Then just simply sum up all the digits. You'll get the answer. I've showed you both the approaches. Whichever you feel comfortable, you do it. That's the first part. Okay, and everyone? Simple they're saying. Okay. Can I show you the depreciation? Okay. Sir, when did you buy the asset? When did you buy the asset? You bought the asset on 1st January 2014. That means you will start depreciation, or can I say depreciation for 2014? I will show it for all the years from 2014 to 2019. I'll show it for all the years just for better practice. That's all. In examination, if you show it for 2019 alone, it is sufficient. Okay. But I want you to get comfortable. Hence, I'm showing it for all the years. Now, how is depreciation calculated here? Okay. First, or maybe one we'll do off here. Before this, maybe I'll calculate depreciable amount. Depreciable amount. Sir, how do you get depreciable amount? I showed you already in the chart. How do you get depreciable amount? Depreciable amount is nothing but original cost minus salvage value or scrap value or residual value. How much is the original cost here? Original cost is 10 lakh. How much is salvage value? 1 lakh 20,000. So 10 lakh minus 1 lakh 20,000. How much is your residual value, sir? Or how much is your depreciable amount? We'll call that as a DA. DA is how much here? 8 lakh 80,000. 8 lakh 80,000 is depreciation. Everybody okay with this calculation? Yes. Okay. Now comes the depreciation portion. So we'll calculate for each year. Depreciation, simply I told in the formula. What is that? Actually, this formula what I've given for depreciation for straight line method, it is not there in your study material. Study material mein directly they have calculated. Based on the calculation, I've constructed the formula so that it will be a little easier for you. So what did you write as formula? Depreciation is given by DA into remaining life divided by useful life. Yes, that's what I have written. Okay, just a quick short of formula I've written there in the chart. Yes, here. If you want, I'll show you the charts again. This is what you have written here. Yes. DA into remaining life divided by total life. Now the calculation part. For 2014, the depreciation will be, what is your DA, sir? What is your depreciable amount? Depreciable amount is 8 lakh 80,000. Okay. So now you bought it in 2014, correct? That means how to calculate depreciation is when you bought it, how many years is still remaining, sir? If you want, you can apply the formula only. When you bought the asset, how many years life was remaining? When you bought it, on the day you bought it, how much life was remaining? 10 years, yes. So you'll write here, remaining life is 10 years. Divided by total life, which is 5 years. So 10 divided by 55 you do. If you do that, you're going to get depreciation for 2014, that is first year. So 8,80,000 into 10 divided by 55 will give me 1,60,000. That is the depreciation for first year. Did everyone understand this? Okay. If you understood this, like second year onwards, straight. 2015, same formula. DA. DA is still 8,80,000. 8,80,000 is depreciable amount. Okay. You are in second year now. 1 year has already passed. 1 year has already passed. How much is the remaining useful life, sir? 1 year has already passed. How much is the remaining useful life? 9 years. Yes, no. Divided by total life, which is 55. Okay. Ridhaman, yes, again you told. Did you understand this, Abadi, now? Is it okay now? Fadafat, response kodipa. Okay, he's saying yes. Oh, so 8,80,000 into 9 divided by 55. That will be 1,44,000 is a depreciation for 2015. Like that. Okay. For 2016, if you have to calculate, means same. Depreciable amount is 8,80,000 only. Now we are in third year. You expected that you will use it for 10 years. 2 years has already gone. So how much life is remaining, sir? 8 years. Divided by total life is 55. So do that. 8,80,000 into 8. If you do, you're going to get 1,28,000. So this is the depreciation for 2016. But in the question, they have asked it only for 2019. Okay. So, but I am doing it for all so that you get a little practice. Done. For 2017, it will be what? 8,80,000. Now, can I directly write into 7 by 55? Okay. Same like this. 10, you take 10 for first year depreciation, 9 to calculate second year depreciation, 8 to calculate third year depreciation, 7 to calculate fourth year, 1 to calculate last year depreciation, like this. Manageable? Everyone okay now? Now can I directly write into 7 by 55? Would that be, I think it should be okay. So this will be how much? 1,12,000. Okay, 2018 it will be same, 8,80,000 into 6 by 55. Okay, so it will be what? 16,000 into 6, which will be 96,000. Okay, all right. Now they have asked 2019 ka depreciation. This is what they have asked in examination. That means whatever we have done till here, no, it becomes a working note. Not really. Actually, in this problem, since they have asked machinery ledger, even this is relevant. Okay, but no problem. Or one moment, hang on. Can you tell me what is the total depreciation up to 2018? Till 2018, how much depreciation have you charged on this asset, sir? Total. Can you add all this? From 2014 till 2018, how much depreciation have you charged? Can you tell me that amount? 1,60,000 plus 1,44,000 plus 128 plus 112 plus 96. My calculator is showing 6,40,000. Agreed? Fine. That means, can you tell me the book value of the asset? Book value of the asset on 1st January 2019. What is the book value of the asset? Or 1 minute, hang on. Maybe I'll show you another way also to calculate this. See, instead of calculating like this 5 times, mathematically, can I just put up one equation? Can I simply write like this? 8,80,000 into 10 plus 9 plus 8 plus 7 plus 6 divided by 55. Can I do like this? Because what I'm doing here is 880 is common, 55 is common. Only this 10, 9, 8, 7, 6, 5 is only changing every year. No? Can I present this like this? Check if you want, calculate this. How much you're getting? 10 plus 9 plus 8 plus 7 plus 6. How much are you getting, sir? Same 6,40,000. Are you not getting that? So instead of doing this straight away, you can do it as one step, which is what they have presented in solution. Check here. 10 lakh minus 1,80,000 they did. They got depreciable amount. Into 10 plus 9 plus 8 plus 6 into n plus 1 they have done. Into 40 divided by 55. This is what they have done. If you present like this in examination, that is good enough. Did you understand the calculation, everybody? Instead of calculating each year, if you want it for 4 or 5 years put together, this is the shortcut way to calculate. Why I calculated this, I'll tell you. Is the calculation okay for everybody? First, give me a confirmation on that. Everyone okay, no? Okay. Why am I calculating this? Sir, why am I calculating this is, in the problem, no, if you just check. 1 minute, let me show you that. They asked you to prepare something known as machinery ledger, correct, no? They asked you to prepare machinery ledger. For which year did they ask you to prepare machinery ledger? For 2019. That means you require balance brought down for 2019, no sir? What is the book value as on 1st January 2019 you require, correct? Did they give you that? Can you directly write 10 lakh? On 1st January 2019, can I write directly 10 lakh? No. We are preparing the ledger from 2019. 10 lakh was the value of the asset, or 10 lakh was the book value on 1st January 2014. You want the book value on 1st January 2019. How are you going to get the book value? How will you get the book value? You bought the asset. Therefore, to calculate that, we require this information. Therefore, book value on 1st January 2019. Can I write? You bought the asset for 10 lakh rupees. So far, you have calculated depreciation for 2014, 15, 16, 17, 18. For 5 years put together, you have depreciated the asset to the extent of 6 lakh 40. That means asset ka value has reduced by 640. Can I tell like this? Yes. That means this will be what, sir? 3,60,000. This was not given in the problem. Hence, calculation of 640 is mandatory in this particular problem. If they had given the book value, I could have cut off all this working note. Yes. Bouncera, repeater. Okay now. Greata. All full. Tirupati Tasa. Goindaya Namaha or okay? Okay, sir. Alright. So, I required this. Now, I have calculated depreciation only till 2018. No. That means now I require depreciation for 2019. Because that year I need to prepare ledger. No. So, how do you calculate depreciation for 2019, sir? Same. Depreciable amount. Depreciable amount is still 8,80,000 only. Okay. Now, will you write into 6 by 55? Huh? No. For 2019, what will you write? Into 5 divided by 55. Because you are in 5th year. No. So, 5 years more is remaining. Like that. Into 5 by 55. Like that. So, 16 5 is 80. I think this is 80,000. Okay. So, depreciation for 2019 is 80,000. So, actually in your examination, only this information is relevant. Only these three if you present, that is good enough. Okay. Top of that, whatever I have written, it is mostly for your reference. You can update in your notes, but in examination, just call out this. That is sufficient. Done. Okay. Now, can we put up machinery ledger? Can we put it up? It's okay. Okay. Depreciation. Machinery ledger. Machinery ledger 1 maybe we'll put it off. They have done it, but just fatafat, I will also do it off. Date particulars amount to. It's okay. They're saying okay. Thanks Vishal, but maybe since I've already started, I'll just complete it off. Okay. Debit to credit. Okay. First thing, LF not required. You can write it. Okay. If you just check study material only. Have they put up any LF column here? Not required, sir. It's fine. In these sort of big problems and all, LF and all, if you don't write, it should be okay. Or if you feel, no, I want to still write it. Have one more column for ledger folio and write it. No problem. Call is yours. Okay, first thing what I'm going to write. They asked you to prepare machinery ledger only for 2019. So on 1st January 2019, first thing you need to write is to opening balance. All the assets will have opening balance on the debit side, yes? So to balance brought down. This is as per my working note number 1. My working note number 1 is giving me book value of the asset on 1st January 2019. How much is that? 3,60,000. Will they deduct the marks for not writing ledger folio? They will not die. It's okay. Or write it. It's okay. If you feel no, I'm not 100% confident on that, you write it. No problem. Fine now. According to me, they should not deduct marks for all this. It is okay. Because it has become an outdated. Nobody prepares in manual format now. No? So the ledger folio, journal folio and all is outdated in fact. Okay. Alright. So this is the thing. Now, what is the journal entry for depreciation? Depreciation account debit to machinery account. That means in your machinery ledger, you will write by depreciation account. That is as per my working note number 1. For 2019, my depreciation is 80,000 rupees. That means you will write here by depreciation 80,000. Anything else happened that year? Any other machinery did you buy? Have they told in the question? No. That means that's all. Over. All good. That means at the end of the year, same day, you will write by balance carried down. How much? 360 minus 80, which will be 2,80,000. So ledger got matched out on both the sides. Okay. That is what they must have done it here. Okay. So to balance brought down 360 by depreciation 80. To balance carried down 280. That's all. Depreciation ledger also they have done. In depreciation ledger, you will write to machinery 80,000. That depreciation is an expense which will be transferred off to P&L 80,000. That's it. Problem over. Now, did you get an idea how to calculate depreciation under this method? Sum of years digit method? No? No problem. Copying. Okay. Copying is okay. Understanding, no problem, right? Okay, that is nice. As long as you're understanding that, things are nice. Fine, Asaru. How we got 80,000, sir? Here, sir. Calculated, no, sir. Depreciation. Chakrapani. You want me to explain, sir, how we got this? 80,000 is here. Explain a good. Chakrapani. Solungappa. Explain pannuma. Or okay va? Okay, sure. Okay. Question number 3 is also done, not done. No. Next method, sir. So we have done 3 till now. So let's go ahead and do the 4th one. We're continuing. 4th one is machine hour method. There is another method known as machine hour method. So same way, how depreciation is calculated under machine hour method is take DA, depreciable amount, multiplied by the number of hours that you have used the machinery in the current year. Okay, divided by total expected machine hours. If you do this, you're going to get the machinery in the first year. It's the same concept, sir. Suppose the DA is 1 lakh rupees. You bought a machinery. You feel you can use it for about 10,000 hours. Alright, you have a data. Because normally this production companies will maintain this data, machinery hours. They will clearly know how many hours they should run the machinery, what should be the cooling time. Like this data, the production companies will have. Small companies may not have it. Production companies will have it. Suppose if you have that data, then you will have an idea how long should you use that machinery for, or how many hours can you run it throughout. Okay, you purchase the asset for 1 lakh rupees. Okay, let's say original cost is 1 lakh rupees. Let's say salvage value is 0. Means you feel at the end of the useful life, you will not get any money. You will have to scrap it off. You will have to give it away for free. Okay. That means what is DA, sir? How do you get DA? Original cost minus salvage value. So that you have done 1 lakh minus 0, which is 1 lakh rupees. I've assumed all these numbers. Okay. The company feels they can use this, or maybe let's make this as the company feels they will use the machinery for 1 lakh hours. Total, throughout. They're going to use it for 1 lakh hours. For first year, they only used for 10,000 hours. Totally they feel throughout the useful life of the asset, they will use it for 1 lakh hours. First year they used only 10,000 hours. Can you tell me how much is depreciation? Logically, without even using the formula, can you tell me? It's a simple calculation, right? See, 1 lakh, DA only is depreciation, right? That only you will allocate over useful life of the asset. Agreed? Yes. This 1 lakh only you will allocate over the useful life. That only you call it as a depreciation. Yes. That means what? 1 lakh is the depreciation for 1 lakh hours. Current year you used only 10,000 hours. No. That means how much is the depreciation? Like that. On this calculation, I built out the equation. So X will be what? 1 lakh into 10,000 divided by 1 lakh. What is this 1 lakh? It is your depreciable amount. What is this 10,000? The number of hours you have used the machinery in the current year. Now, what is the denominator 1 lakh? It is nothing but the total expected machine hours. That's all as a formula. This is the logic for the formula. Did you get it? cross multiplication. Did everyone understand this formula? Logic way of, decoding that? Yes, that's all it is. So can we go ahead and apply this in one of the problems now? Decode it. Okay. All right. So I think third one we have done. No, fourth one I think we need to do. Okay. Fourth one. A machine was purchased for 30 lakh rupees with an estimated total working of 24,000 hours. That means what is this 24,000 hours? The company feels they're going to use this machinery for a total of 24,000 hours in totality. From the day they buy it till the day they sell or they scrap it. That totally they're going to use it for about 24,000 hours is what they're saying. Useful life. Useful life they have given in hours. Normally you're going to get useful life in years. No. Here the useful life is given in hours. Instead of years, it is hours. That's all. Okay. The scrap value is 2 lakh rupees. So originally you purchased for 30 lakh. Scrap value is 2 lakh rupees. The anticipated pattern of distribution of effective hours is as follows. Okay. For 1 to 3, for year 1, year 2, year 3, company feels they're going to use this machinery for 3,000 hours every year. Meaning, first year they will use it for 3,000. Second year again they're going to use it for 3,000. Third year again for 3,000 hours. Every year 3,000 hours they're going to use it for the first 3 years. For the next 3 years, year 4, 5, 6, they'll use it for 2,600 hours every year. Meaning year 4 they'll use it for 2,600. Year 5, 2,600. Year 6, 2,600. Like that. From year 7 to 10, 7, 8, 9, 10. For the next 4 years, the company feels they'll use this machinery only for 1,800 hours every year. Alright. Somebody is saying, sir, is it total machine hours in the denominator? Yes, it is total machine hours in the denominator. Correct. Okay. Determine annual depreciation under machine hour rate method. So under machine hour method, you need to calculate the depreciation. So how do you calculate depreciation now? That is given by what formula? In fact, formula we wrote. Study material there is no formula. Directly they have calculated. But we will still write. How do you get depreciation? Depreciation is nothing but depreciable amount multiplied by what, sir? Number of machine hours used. Correct, no? Number of machine hours used in the current year divided by expected machine hours or total useful life. Can I write down? Or can I write it as total machine hours? Like this, can I construct the formula? Okay. That means you tell me, sir, what is depreciation? For year 1 to year 3. For year 1 to year 3, what will be your depreciation? First of all, what is DA? Original cost. You bought the asset for 30 lakh rupees. If you want DA also, we could have written here. DA is what? You bought the asset for 10 lakh rupees. Or rather 30 lakh rupees. Minus what? How do you get DA? Depreciable amount. Original cost minus residual value. What is the residual value or salvage value? Salvage value they're taking is 2 lakh rupees. That means your DA is 38 lakh rupees. So what will be your depreciation for year 1 to year 3? DA, that is 38 lakh rupees. Multiplied by what? Number of hours used for year 1. Year 1, how much did you use, sir? Year 1, you have used the machinery for 3,000 hours. Divided by total hours, how much that you can use from this machinery? 24,000 hours. So that is your denominator. So if you do this, you're going to get first year depreciation. That will be how much? 38 lakh divided by 24,000 into 3,000. If you do, my calculator is showing 4,75,000. 475 or 350? 350. I did a calculation mistake. Oh, this is 28 lakh. I wrote 38 lakh. Okay. Yeah, this is actually not. 30 minus 2 is 28 lakh. No, yeah. Okay. 28 lakh. Now when we recalculate, how much it will be? 28 lakh into 3,000 divided by 24,000. We're going to get 3,50,000. Correct. 3,50,000 is my depreciation. So for all the 3 years, it is 3,50,000. No. First year is 350. For year 2 also 350. For year 3 also 350. Because why? For all the 3 years, you'll use 3,000 hours every year. From year 1 to year 2, to year 3. For each year, depreciation is 3,50,000. Okay, that's how they've written here. All right, 350 is not for all the years put together. It is for each year. It is 3,50,000. Okay, because they've clearly told per year. That's the reason. Same funda. Can I go for the next? For year 4 to year 6, what will be depreciation? DA is 28 lakh. Into what, sir? Number of hours used. How many hours did you use in the current year? 2,600. Divided by total number of hours, which is 24,000. If you do that, you're going to get 303,333. That is the depreciation every year for year 4, year 5, year 6. For each of the 3 years, depreciation is 3,03,333. Last 4 years, 7 to 10. DA is still 28 lakh. That will not change. Multiplied by number of hours used, which is 1,800. Divided by total number of hours, which is 24,000. If you do this, you're going to get, they're saying you're going to get 2,10,000 is the depreciation every year. That's all under machine hour method. Okay, next method is, we'll go back to the chart. Next is, okay, machine hour we covered, no? I think there's one more here on the same problem we have. 1 minute. Actually, there is also something known as units of production method. Okay, I've not brought it to the chart because one and the same. Machine hour method and units of production method both works in the same line. Okay, can you tell me how did you get depreciation under machine hour method? What did you do? You took depreciable amount. You multiplied it by what? Number of hours machinery was used divided by total hours. Yes. There is another method known as units of production method. How that works is take the same DA multiplied by the number of units produced in the current year divided by total expected units. Total expected units of production you can write. Same. Instead of hours, no, substitute with units. It becomes units of production method. That's it. Because you will use the machinery to produce the goods, no, sir. Okay. Same funda. Instead of hours, substitute with units, you will get it. If you want, you can copy this formula in your notebook. This we have to apply it in question number 5. Did everybody get it? Okay, no? Same logic. That's it. Instead of hours, it is units. That's all. Can I go for question number 5? ಫಟಾಫಟ್ ಹೇಳಿ, ಬ್ರೇಕ್ ಬೇಗ ಸಿಗುತ್ತೆ. ಬ್ರೇಕ್ வேணும்னா சீக்கிரமா சொல்லுங்களே. வெயிட்டா? இப்போ சொல்றாரு பாரு. ஓகே சார், தேட்டலி. Okay. Machine is purchased for 20 lakh rupees. So that's your looks like original cost. It is estimated useful life is 10 years with a residual value of 2 lakh rupees. That means what is DA, sir? What is DA? DA will be 20 lakh original cost minus salvage value 2 lakh. So depreciable amount is 18 lakh rupees. Perfect. The machinery is expected to produce 1,50,000 or 1.5 lakh units. So 1,50,000. By buying the machinery, you generally use it for producing goods, right? So they are saying from this asset, totally I can produce 1,50,000 units. That is the expected number. All right. Expected distribution pattern of production is as follows. Okay. All right. One question to you. Just because I can produce 1,50,000 units in first year only, I will produce 150. Yeah? Just because I can produce 1,50,000. Okay. First year, I'll produce everything in first year only? No. How much ever is the demand, that much only I will produce. Yes, no. This is my capacity. Okay. But that doesn't mean that first year only you will produce off everything, right? How much ever is required for first year, you will produce it. Correct? So that is what they've given here. For the year 1, year 2, year 3, you produce 20,000 units every year. Meaning first year 20,000, second year again 20,000, third year again 20,000 you produce. Okay. From year 4 to 7, you produce 15,000 units every year. Meaning year 4, 15, year 5, 15 again, year 6 also you produce 15,000 units, year 7 also 15. From year 8 to 10, for the last 3 years, you produced 10,000 units every year. Determine the value of depreciation under units of production method. Same formula. How much is it? DA. How much is DA? 20 lakh minus 2 lakh, which is 18 lakh. For year 1 to year 3, how will you get depreciation, sir? Take DA multiplied by number of units produced in the current year. For the first year, how much did you produce? 20,000. So multiply by 20,000. Divided by total expected production, which is 1,50,000. So it's basically 18 lakh for year 1 to year 3. It will be 18 lakh into 20,000 divided by 1.5 lakh. If by doing this, you're going to get 2,40,000. That is the depreciation every year. First year 240, second year again 240, third year again 240. This is 2,40,000 per annum. PA. PA means per annum. Okay. From year 4 to 7, it will be same. DA, which is 18 lakh, multiplied by, for year 4 to 7, how much did you produce? 15,000. So multiply 15,000. Divided by total expected production, which is 1.5 lakh rupees, which gets you 1,80,000 is a depreciation every year from year 4 to year 7. Last is year 8 to 10. DA is 18 lakh only. Year 8 to 10, you are producing 10,000 units every year. So multiply by 10,000 divided by total expected production, which is 1,50,000. By doing that, they're saying you're going to get 1,20,000 per annum each year. That's all. Problem over. Simple enough, no? Simple problems we can do the solution method, right? There are another 7-8 problems like this which has some calculation that if you want, we can calculate that based on your comfort zone. Yeah, these are easy. I can do it, right? That's the reason I print solution. That is one advantage, because I want to cover maximum number of problems in the shortest possible time. That is my funda. Okay. I want you to practice also, but at the same time, give you all the length of questions. See, if I solve everything, no, I'm not lazy. I can solve every question. In fact, in CA final level, CA inter level, we do almost every question. Okay. In fact, I do solution method only few problems. I solve everything because each question becomes different there. That's the reason. But here what happens if I solve each question, no, from 130 hours, my commitment will become 170 hours. That's the reason you see some of your online recorded guys, if you just see, some teachers will say 160 hours, 170 hours ka recording. Unnecessary it is. Simple enough, no? We'll try to cover as much as possible in shortest time. That way, see, saving time is required in CA examination. One subject, you should not spend 200 hours in learning. That much and all, nobody will sit and study. Okay? So easy things are printed out, the solution. That's the reason. If you feel anything, I have a complications, you let me know. I will solve those, no funda. But this approach is okay for you, no? I'm not following this approach because I am lazy, alright? I'm following this approach because I can solve most questions under the shortest possible time. That is only funda. Okay, right, everyone? Later, don't spread rumors. Hey, or madade illa anta. Okay, no? Yes. Alright, yes. Great enough. Okay, this is one question we will do. Then we will take a break. Okay, so this question number 6 is based on one more method, which is depletion method. Depletion method. Normally for your mines, if you have any gold mine, coal mine like these, for mines and quarries if you have, those mines and quarries, we call it as wasting assets, like KGF, correct? Like those if you have, that we call it as, in accounting terminology, we call it as wasting assets, meaning as you extract gold from a gold mine, that gold mine will become worthless. Yes, no? Yes. Yes, as long as you have the gold, as long as you can mine the gold, that mines will have value. But the moment you take off all the gold from that, yes, it becomes worthless asset. Hence, we call these assets as wasting assets. Okay, fine. Excuse me. So, for these wasting assets, okay, we use something known as depletion method. How depletion method works? Depreciation is given by the formula same, DA, that is depreciable amount multiplied by, sir, from a gold mine, what are you going to extract, sir? From iron ore quarry, from mineral ore quarries, what do you extract? From iron ore quarry, you're going to extract iron ores, correct? No. So from gold mine, you'll extract gold. So your multiplication will be quantity extracted in the current year divided by total expected quantity to be extracted. In fact, this machine hour method, this units of production method, this depletion method, all these are in a way same only, no? Just substitute. In machine hours method, you substitute machine hours. In units of production method, substitute units. In depletion method, you substitute what? Quantity extracted. That's all it is. It's not really a new method. It's the same funda. Are you okay with this, everyone? Fair enough. Can we go ahead and apply it in one other question now? All this formula is not there in your study material. Okay. I have just made this formula so that you can remember it. That's all. Okay. Directly calculation study material is put in. Okay. Where is the question? Okay. Question number 6, I think it is. Messrs. Surya and Co. took a lease of a quarry on 1st January 2017. Okay. For 1 crore rupees. Normally, this gold mines and all, no, you cannot own it generally. You'll have to lease it from the government. Government will give you like for 10 years lease, 99 years lease. Like this, they will give it to you for a certain period of time. Okay. But I already explained you one concept. Do you remember? Substance over legal form. Anybody remembers that concept? We discussed something known as substance over legal form. What is that? In one line, what is that meaning? Reality is more important than legality is what I had told you. Remember? Yes, somebody saying A is 19. That is great, Neha. Okay, she's able to remember standard number and all. That is awesome. Okay. Yes. A is 19 runs over substance over legal form. Not just that. At inter level, A is 19 runs. In CA final, many standards run on substance over legal form concept. Meaning, you should not just look at the paper or documents or legality. You should also look at the reality of transaction. I told you if you are taken an asset on lease, okay, that the lease also can become your asset, or you can show it as an asset in your books because you are getting a benefit from it. Yes, that is the funda here. Okay, though you have taken a quarry on lease for 1 crore rupees, you can still show that quarry as an asset in your books. Okay. Yes, it becomes your capital expenditure. Perfect. Because why is this a capital expenditure? Is when you take a quarry on lease, do you think you'll just take it for 1 year and all? Do you think you're going to take this quarry on lease for 1 year? No, generally the period will be 10 years, 15 years, 20 years, 30 years like this. It will generally be for more than 1 year. That is the reason you can show this asset that you have taken on lease also as an asset in your books. Okay. Now I think I can move forward. Yes, as per technical estimate, the total quantity of mineral deposit is 2 lakh tons from this particular quarry. That mineral ore only we call it as quarry. Okay, that's the name given. That's it. From this quarry, all right, you can extract totally 2 lakh tons. 2 lakh tons of minerals it's possible to extract is what the company feels. In their lease period, they feel they can extract this much tons. Does it mean in the first year only they'll extract everything? Yes, 2 lakh tons, you'll extract everything in one go only. No. Okay, how much ever possible, because even workers will not work 24 hours now. They'll only work 9 to 10 hours a day. Yes. So depreciation was charged based on depletion method. The extraction pattern they've given. 2017, first year, you extracted only 2,000 tons of minerals. 2018, 10,000 tons. 2019, 15,000 tons. Totally you can extract 2 lakh tons on that. Okay. You need to show quarry lease account, basically asset account. This is your asset here. You need to show asset ka ledger and you need to show depreciation ka ledger. And from 2017 to 19. Sir, is ledger really a problem for us? For our standard, we will shrug this off. This is chotte problem, correct or no? But we will do it. Yes. But we need to calculate depreciation. Yes, no? Okay. So calculation of depreciation, one working note, we'll put it up here. Working note number 1. Depreciation. How do you calculate depreciation? For that, first you require a DA. How do you require DA? You can directly put an examination, but in our classwork and all, we will always write a DA and then proceed. How much is DA? 1 crore rupees you purchase this asset for, sir. Is there any salvage value, scrap value? Nothing. So 1 crore rupees only is your value. You have taken it on lease, no? So you can't sell it. So you will not get any salvage value in these cases. Okay. Since generally salvage value will be 0 in these cases. So DA will be 1 crore rupees. Okay. Oh, somebody is given compliment also in between. Oh, thanks. Thank you, ma. Okay. Okay. Thank you so much. All right. DA is 1 crore rupees. What is depreciation now? What is depreciation? For first year, that is 2017 ka depreciation ಎಷ್ಟು ಗುರುಗಳೇ? How do you get DA? I mean, how do you get depreciation? Depreciation is a DA multiplied by quantity extracted in the current year divided by total expected quantity. Yes. Okay. So DA is how much? For 2017, what will be your depreciation? DA is 1 crore. For 2017, you extracted 2000 tons. Totally, you're expecting to extract 2 lakh tons. So 2 lakh is your denominator. How much? 1 crore. Excuse me. 1 ಕೋಟಿಗೆ ಎಷ್ಟಪ್ಪ ಸೊನ್ನೆ? Okay, 1 crore divided by 2 lakh into 2000. That will be 1 lakh is the depreciation. 7 lakh, 7 lakh, 1 lakh, noda. You're confusing me, 1 lakh only, no? Okay. Okay. 2017 is depreciation. Oh, 7 zeros. Okay. Thanks, macha. Okay. 2018, what will be depreciation? Same. DA is 1 crore multiplied by 2018. How much did you extract, sir? 10,000 tons. Divided by total extraction is 2 lakh. So this will be 50. So this is 5 lakh. Okay. Calculation is 5 lakh. 2019 will be DA is 1 crore. In 2019, you extracted 15,000 tons. Total tons is 50. So 50 into 50, I think this is 7,50,000. That is your depreciation calculation. If anyone is copying, I'll wait up. They have showed it here only, sir. If you want, you can show it in the ledger also, the calculation. Fine, that is also acceptable. If you want, you can make a separate working note like this or show it within ledger itself. Showing within ledger is a shortcut way and less time consuming method. Okay. So I suggest this method for you. But in your notebook, have it. How to calculate, show it. Because once if you know it properly how to calculate, no, then you can apply the shortcut methods and all like that. First, we should know how exactly it works. Then cutting short and all, we can aram se do it. Still copying. Okay, others can run through this ledger. You can watch the ledger and you can start your problem. I'll catch up. I'll give about maybe a minute or more for people to copy. Watched also. Okay, then you can take break. Break for you. Others wait. Others wait. Okay. Alright, sir. So one asset ledger, that is quarry lease account, and one depreciation ledger they've asked. Sir, you have taken a quarry on lease by paying 1 crore rupees. So the journal entry is what? You purchased this quarry, no? Or you have taken it on lease, no? So quarry lease account debit to bank account 1 crore rupees. It's like same asset purchased only. Okay, same entry you will pass. Asset account debit to bank account 1 crore rupees. Fine. That's all. Only one quarry or mineral ore you took it on lease for the first year. No other drama. But you have used it, no? That means you should depreciate it. That means what is the journal entry for depreciation, sir? Same. Depreciation account debit to asset account. Here, what is asset ka name? Quarry lease. That means the journal entry for depreciation will be depreciation account debit to quarry lease account. Okay. Then depreciation is an expense. That expense should be transferred to profit and loss account. So P&L account debit to depreciation account is the second journal entry. These two is what you need to pass. Okay. So in quarry lease, you'll write by depreciation. What is the depreciation for first year we calculated? First year ka depreciation is 1 lakh, which they've written. Okay. You bought it for 1 crore. You have depreciated it first year by 1 lakh. So no other drama. So the end of first year, balance carried down 99 lakh. So ledger for the first year has been closed. Similarly, in depreciation ledger, you're going to write for first year to quarry lease 1 lakh. This 1 lakh is an expense which will be transferred off to P&L. So depreciation first year ledger also closed. Second year, you'll write to balance brought down quarry lease 99 lakh. For second year, we have calculated depreciation to be 5 lakh. So you'll write by depreciation 5 lakh. Then by balance carried down 94 lakh. So 99 lakh got matched out. Third year, to balance brought down 94. Third year ka depre is 7,50,000 and then by balance carried down is 86,50,000. This ledger also khatam. Depreciation also same thing. To quarry by P&L. That's all is the funda. Pretty rare. These will turn up. Yes, tumba easy. Correct. Alright. If you are lucky, if you find these sort of question, one big smile should come across your face. Okay, it should come. Let's see if it comes. Sometimes it comes. All right. Let's see. Let's wait and watch. We'll get to it. When you write your attempt, I will get to it. Done? Yes, sir. So with this, all the methods of calculating depreciation we have done. Okay. Then we will see. There are a few more types of problems. We will take a break for about 20 minutes now. Then we will see next type of problem in this particular topic. Thank you.